So, hello everyone. Welcome to the next panel of the session, this time on securities tokenization, of obviously an area that's moved well beyond proof of concepts, and we're looking into new areas here. I'm joined by Katie Ann Wilson, who is the Managing Director of the Digital Monetary Institute, that's a mouthful, from OMFIF, and we're going to kind of take you through a brief session on securities tokenization. So, Katie, I think I'd like to start off with where tokenization is already winning, so to speak. So, which production use cases do you think has truly moved beyond the pilot phase and set the current standard? And what measurable benefits has it delivered?
Great question. It's hard to pick one, but one that I'm quite familiar with and that I think is quite remarkable is, I would say, Franklin Templeton and Stella's tokenized money market fund. I think this is quite an achievement, for one, because it's an asset manager using public blockchain. So that I took many hurdles to go through with the SEC, and after I think quite a few years they managed as an issuer to be able to do this. So that's an achievement. If you want sort of a really tangible savings in that project, it's something like what would have cost Franklin Templeton $50,000 for reconciliation and record keeping now only costs them $120. So there's a huge cost saving for the issuer on that project, as well as all the other benefits we talk about all the time, like 24/7 liquidity, faster settlement, and all those perks that you already know about. So I think that would be my top choice.
And you talked about liquidity there, I want to take it from the regulatory front. We've seen a lot of progress on the regulatory front, but do you see key initiatives key initiatives in that area that will genuinely unlock liquidity and broader issuance?
I think it's a really crucial time right now. I would say that actually regulators need to become more understanding of public blockchain. There's some current requirements are actually, I would say, more holding it back. So if you look at the Basel standards on crypto assets, this has been a huge problem for banks' adoption of tokenized assets on public blockchain. They have really stringent prudential requirements. It's something like a 1,250% risk weighted, which basically means a one-to-one capital backing, which is just impossible for banks. So I think that will change and should change. A similar sign of that kind of thinking is the HM Treasury just announced that for their digital gilts, when they're looking at vendors, they also want that to be on a private chain. This, again, is something that we're quite worried about, and we think that the mind shift needs to change away from dictating a chain and looking more about the features and the functionalities. So we hope, and we're OMFIF is not pushing for a public or private technology, but we are hoping that regulators will not think about the technology and be more agnostic, and instead say, this is the features we need, this is the functionality we need. And when they do that, you'll get the banks. And then when you've got the banks, you're going to go mainstream.
All right. Okay. And then, obviously, tokenization, like much of finance, it doesn't work in isolation, and the securities still need a settlement cash leg. In this vein, for you, what's the most realistic path to interoperability and central bank money settlement?
Yes, the central banks. The central banks are doing a lot on this. This is a key component of it. The Euro system is very far ahead, I think now. They've managed to combine the best bits out of their three central bank projects, the Banque d'Italia's RTGS Link, Bundesbank Trigger, and the Banque de France, the DLT platform. My understanding is next year, I think March, Pontis is what they're calling it, where they're merging the three best bits from those projects into one wholesale tokenized central bank settlement solution. There's lots of complicated trade-offs within these discussions, like whether it's cost effective to build a whole DLT platform, whether actually just synchronization is easier. So they're looking at that, but they are ahead. But then if you compare that to the Fed, for example, we've heard nothing from the Fed for quite a while on a tokenized wholesale central bank money settlement option. The executive order was vague on the CBDC ban, whether it was wholesale and retail. Everyone's hoping it's not wholesale. I don't think it is and will be, but it's still slower. And then where we are now, Singapore, they're doing a very interesting piece of work with Project Bloom. So they're looking at tokenized commercial bank money and regulated stablecoins for wholesale settlement. A very different approach, but one that I think will allow them to tap into the the requirements as a financial hub. It will be interesting to see, though, how their stablecoin regulatory regime plays into that, because the regime itself only allows regulated stablecoins in G10 currencies. So we're going to be keeping an eye on, what does this mean for Asian currencies and like regional corridors, and how is that going to play out, and whether that means that tokenized deposits might be more used in those corridors more than regulated stablecoins. But nevertheless, it's a very exciting piece of work. So you can see this divergence in approach, but lots happening and needed, as you said.
Okay, so like 3 vastly different kind of ways of approaching things. But then, as a final question, and being a bit more forward-looking, if what milestone would you say in the next kind of 24 months would mark a genuine step forward for tokenization? When you could say, like, we've moved from experimentation to adoption?
I don't think there is one. I think it's all of the above. I think it's the tokenized central bank money, as you said, the attitudes to public blockchain from regulators shifting. I think it would be a secondary market in natively issued assets. I think that would be good. So I think it's all of those things combined. But then also, I think the industry itself has had a shift. I was in a panel yesterday, and someone said that we've had to stop explaining the benefits of tokenization, and we can now just think about the how. And I think that's really important, just as an industry, as a collective group of people. If we've all come to that realization, it means that there will be change. And I think the detail is happening now. We're working out the how, but I think it will come.
Fantastic. Well, thank you very much, Katie, and stay around and join us for our next panels. Thank you very much.
Thank you so much, Jonathan.